Well, we've got Hass, just one of the region's oil marketing companies that's operating with the aim of becoming a market leader in the region. From a regional perspective, how has the company weathered the global economic downturn?
Thank you. And as you have said, we have good presence in the region in 7 countries. And of course, what has helped Hass Petroleum is that we have invested across the board and across the region. And therefore, as much as we've been affected by the global and economic crisis, so far we have remained afloat. I think our strategy was right. We've managed to cut costs and therefore remained profitable, despite the harsh reality in the market.
Let's talk about this investment that you speak of across the board, because what we've seen, and we can use Kenya as an example here, is we've seen oil marketers, specifically the multinationals operating in this space, exiting Kenya over the recent past, and they've cited low profit margins as their primary reason. So what exactly is cushioning your company?
Well, I think one of the things that that helps us is the regional spread, and we are in almost 7 countries, and therefore dynamics in each of those countries at any one particular time are different, and therefore that substantially has cushioned our company from the realities of the market. But also I think the discipline, the costs, we've managed to manage our costs, and therefore we are able to relate the market realities and our operational and efficiencies as far as the day-to-day running of the company is concerned. And I see that as being the major contributor. And despite the fact that we are seeing a lot of companies and saying closing shop and saying we're ready to go. So that is the route that we have taken differently.
Well, you talk about your regional muscle here, so let's talk about your operations. At the moment, which territory contributes to the bulk of your bottom line, and do you see a shift occurring when it comes to that major contributor?
And we are in, our major businesses are in Kenya and Uganda, but however, we also control substantial markets in Southern Sudan, in the Democratic Republic of Congo, in Rwanda, in Tanzania. And of course, those are smaller markets, and therefore, despite us having much smaller operations as compared to Uganda and Kenya, we are still the major force in those countries as well.
Well, if we look at Tanzania, I mean, we've got the company having gained a strong foothold in the country by investing in an oil terminal. Completion of the first phase of that Dar es Salaam depot is for the first quarter of this year. To what extent do you expect this to enhance your capacity moving forward?
Well, I look at it from 2 aspects. One is the region that Tanzania serves. Tanzania is a port, and therefore we target the southern part of DRC. We look at Zambia, we look at Malawi, we look at Burundi, we look at Rwanda, and therefore when you look at such a market, therefore, and having a strategic asset in line with a strategic asset, the like of what we are looking at in Tanzania will come in handy, and that actually has guided our investment and priority as far as that depot is concerned. Equally important market is Tanzania, which is also substantial, and therefore by having such a strategic asset, we will be able to consolidate our position in Tanzania, and therefore our investment in Tanzania was strategic, and those are the markets that we are looking at.
Well, for now, as you mentioned, Uganda and Kenya providing a bulk of the support to the business. So let's hone in on your Kenyan operations specifically. I mean, what do you see being your competitive advantage in this space against the likes of a player like Kenol Kobel, which is also pretty dominant?
Well, Kenya is a mature market, and as you said, also one of the markets where we have substantial and a big number of players and well-established companies. But I think what has differentiated us as a company over the years is our efficiency. We have been able to relate with our customers very well, and therefore add value in the chain as far as serving their needs are concerned. Kenya is a mature market. There are a number of big players, but what we see are niche that we can make use of. And our growth in the last few years is testimony to that. Despite the fact that these companies have been there all these years, we have been able to make that kind of in-depth and access to the market, and therefore the future can only be better.
To what extent, sorry to interrupt, but we are running out of time. So to what extent are you using pricing as a competitive tool here, where pricing has been a bone of contention, specifically in Kenya? On Monday, we saw Kenyan Cobalt reducing its pump prices. We saw the National Oil Corporation, Total, Shell also planning to follow suit as well. Just how are you playing the field in that regard when it comes to price structures?
Well, I think in our industry, pricing is not a strategy that is sustainable from our point of view, and because the sources are equally the same and the infrastructure that we use is the same. Of course, there is a difference in the way we run our businesses. There is a difference in our cost base. However, the price majorly is not a major factor. What we differentiate ourselves is being able to identify with the customer and be the preferred supplier of the customer. Our objective is that the motorist on the road in the morning should be able to say that I'm heading to Hasps and station in such and such road, and because of the service. Of course, as far as pricing is concerned, we are not ignoring it, and we play and win the market, and of course make sure that we are also careful about the needs of our customers.